everybody some time to join in real quick, like. I'll give everybody some time to join in real fast. All right. I'm posting real fast on my social medias real quick. All right. All right, we're posting on the social medias, and then we active, and we could begin the stream. First ever stream, man. Let's get to it, man. I'm excited. I'm excited. All right. Let me make these posts real quick. All right. Here we go. We got everything out that we needed. All right. Got everything I needed to do out the way. And I still just leave some time in here for everybody, for a couple people to get involved and get joined in, and then we could go ahead and start. All right. And as you join, just go ahead and say a word or two. Let me know who in here, because I can't really see it on my end. Let me know who all in the chat. All right, cool. All right, so I'm about to go ahead and get started nonetheless. And as people join, we can continue going on about what we're going on about, right? See a couple people in the chat. Everybody that's joining the chat, go ahead and let me know y'all in here. Say what's up to your boy, so I could have an idea of who's here, and then we could go ahead. I'm gonna go ahead and get started on this too. We're gonna get into some topics real quick. Haha. I see you in the chat, okay? All right. So let's go ahead. Oh, let me set this up too real fast, so I can see the chat. We can all see you can see what I'm looking at real quick. All right, what's good? I see y'all right here. I got the chat on the screen now as well. There we go. Gonna move that up just a little bit out the way. All right, cool. It's my first 3 viewers. It's all my family, my folks, man. Wouldn't want to have it no other way. All right, cool. Let's lock this back. All right. So without further ado, we're gonna go ahead and just get right into this, man. And so just the introduction of who I am. My name is Trey. I started this TraderBoyz platform in 2024 with not much idea of what I was planning on doing with it. I knew that I liked investing, and at that time I really liked trading. Hint the name TraderBoyz. It was me and a couple of my friends, and the brand turned into what it is today. And here we are in the beginning of 2026, live streaming with charts and just talking about investing and how to get involved and trying to make that clarity for people that do not understand what investing is, because investing is essential in the way that we live, in the way that we function. But just the way that our world is set up, it's set up so that we don't understand investing, so that we don't get into investing, and that we don't multiply our money and take advantage of the market. Hello, Miss Ruth, I see you in the chat. How you doing today? But yeah, so we're gonna get straight dived in. So I wanted to do a quick introduction on why we are here today. And this first stream that I'm doing today was just to be a stream talking about investing, so that people could get that idea of, hey, I should invest, or people may have been in that realm of, I want to invest, but I don't know exactly what to do, where to start, how to begin. And you could go try to do your own research or look at other different things, but if you don't have a source that you could ask questions and relate to, then it makes it much harder. So I hope that I could be that source for you, or if not, I could direct you into the right way as well, so you could do your own research, right? So first thing first, we got the stock market is something that we all are aware of, and we all know what the stock market is, right? The stock market is where you could buy shares of our favorite companies, whether that be Apple, Tesla, Amazon, companies that we all know and love and heard of, right? And always feel free to comment any questions if I'm moving too fast, or if you just want to jump in and have a question of what you always wanted to ask, or something you don't understand. Feel free at all times, okay? But the stock market is something that's been around since the 1800s. The stock market was actually created under George Washington's presidency. So a lot has changed since then, since George Washington was in office, right? But the stock market has been around since then, and it's revolutionized over time. It started as investing into railroads, and John D. Rockefeller, J.P. Morgan. It started into being able to invest into railroads and see who could dominate the railroad industry, and that's how the industrial revolution began. Who had the most railroads, the most oil, the most coal, and those were the people that were running the front lines. Eventually it turned into shares of companies. So now we could go and buy Apple and try to own some shares of Apple, or go buy Tesla and own some shares of Tesla. But yeah, and the thing is over time, the stock market has proven that it continuously grows. It continuously grows because we live in a world where we need things. We need a phone. We need clothes off Amazon. We need these sorts of things. So it's better to not only buy a new iPhone, but buy some shares of the iPhone, because every time you buy a phone, you're putting your money into buying the phone to have, right? I have this phone. I bought this phone, but if I don't own any shares of Apple, I'm not getting any sort of return on investment, right? And that's really all investing is. You're buying something, but you're going to get a return on it. We've got stuck in the mindset of buying things, and our return on the investment is having that like dopamine feeling of, okay, I just bought a new jacket, but what are you going to get back for the jacket? It's not going to be any revenue or any cash or anything that you could save down the road. It's just going to be the jacket. And if you bought that jacket off Amazon, guess what? Amazon stock is rising. So that's really what investing is, and what a lot of people should get involved in investing, because we already are involved in investing. And the people that are, the stocks that we invest in revolve around us, right? So that's just kind of like the basic functionality of the stock market, what the stock market is, a little history of the stock market dating back to the 1800s. And since then, it's been a lot of changes, right? So just wanted to touch there and just start right there. And then now we have the crypto market. And the crypto market is not trying to replace the stock market Essentially, it's going to be a new lane in investing. So remember, the stock market was created in the late 1800s when George Washington was in office. He created Wall Street, the New York Stock Exchange. And now we have another asset realm we could invest in, which is the crypto market. And a lot of people don't understand the crypto market. They hear the word crypto and they may have been introduced to it wrong. You may have watched the news and seen CNN or NBC or ABC and Fox saying all these negative things about crypto. But here's the fact of the matter: it's the future regardless. It's where we're heading. We're going to be operating on new financial rails. We're going to be eliminating the middleman, the banks, when it comes to these financial rails as well. And the big reason this even came about, where the crypto market came from, was the 2008 recession. We had that recession where the housing markets have failed because of all those high mortgage rates they were selling to other people. And what are your thoughts on Shiba? So for Shiba, Shiba, real quick for you in the chat that don't know, and I'll get right back to where we were just at. But Shiba is a token in the crypto realm. So I see Miss Ruth already has a little more knowledge on crypto. But yeah, Shiba, I mean, for me, I'm not much into meme coins. So like any coins that don't serve utility. I'm more utility driven when it comes to that. When it comes to investing in crypto. So I look at ISO 222 tokens. This is me personally. This is not financial advice. Of course, this is how I structure my portfolio. Like ISO 222, and I look at utility tokens such as Bitcoin, of course, Ethereum, Solana, things of those nature that run the blockchain realms. As far as like things like Shiba or Dogecoin or paying you or things of that nature, I'm not saying there's no utility there or they're not a worthy enough investment for me. It's just not the market that I'm in crypto. Okay, so those are my thoughts on that. Thanks for asking that, Miss Ruth. But going right back to where we were just at with the crypto, right? So it's not going to be replacing the stock market. It's going to be another investment tool. So you can invest your money into companies. Now you'll be able to invest into the new way of the financial system. Okay, so like I was saying, it came from the '08 recession. A lot of us, I mean, in 2008 I was 7, so I didn't know what was going on at the time. But the 2008 recession was a big thing that happened for our country. And when you look back at the why of the recession, it was the banks and it was the housing market. So the mortgage rates was high and people couldn't pay it, and the banks didn't have the money for you, and so that created a recession. How people lost houses, people had to move. I'm the BODG. Appreciate you. How you doing? But I'm in the building. I see you. But people had to lose houses because of that. People lost money because of that. People went into debt because of that, and a lot of people didn't truly understand why in that moment. But a lot of people did understand why, and the people that did understand why, they were like, okay, we need to make a new standard, because this can't happen. Banks cannot have our money hostage, and we get sold something bad, and now we can't retaliate. So that's where the crypto market became an idea. So in 2008, and it's not just necessarily the crypto market, it's more of decentralized money that became the idea. Digital assets. Remember, the internet was just the new big thing at this time in the early 2000s and 2001, late 1900, in the late 1990s. The internet just had came out. And now with the internet being a new technology and something new, they're like, okay, we could eventually move our money on the internet. But in 2008, it was still relatively new. So it's like, we can't, just because we had a recession, we can't go all in on this new system that we don't even understand yet. But the idea was there. And the idea was that we could have digital assets, digital money, smart contracts, so that you can't lie on paperwork. You can't lie on Excel spreadsheets of what you think you have in your account and go sell that to someone, and then when the time comes, that wasn't really there, so now you put me in a bad spot. No, you can't. There's no faulty paperwork with that. Now the smart contracts ensure that everything is going to be authorized the right way, everything moves on one accord, and everything is public knowledge, so we could all go and see it. When we selling that in 2008, it doesn't make any sense. But in 2008, that's where Bitcoin came through, and we could talk a lot about Bitcoin. We could touch on Bitcoin as well if you guys have any questions. But Bitcoin was like that first asset to come through that is the face of the crypto market in today's realm, and that's the chart we actually have right here. So we'll look at a lot of different crypto token charts as well, just to break down some chart work. But Bitcoin was the first one through the door in 2008 as a decentralized token to buy. 2008, the banks did adjustable rate mortgages and people lost their homes. See, yes, exactly. That's my Ganny right there in the chat. But yes, you see, so the banks did adjustable rate mortgages and people lost their homes. Exactly. And that was the reason why the crypto market was born, and why Bitcoin was born to start with. And it was basically like a decentralized answer to those banks. It was a smack in the face to those banks, right? And that's why it's been a lot of legal fees, a lot of regulatory clarity that's going on. A lot of different things are going down right now from 2008 till today, 2026, nearly 20 years later, right? And it takes a long time to build a new system, pretty much. And a lot of people don't understand that. A lot of people don't know the history of the crypto market, the history of digital assets, where this came from. So I definitely wanted to start there with some clarity on all of that and how we're going to be looking at this from this point of view. So we're not looking at it as, oh, well, decentralized money, that's a scam. Drug dealers could operate on there. You never know who could send you money. You never know this. Yeah, all that may be true, but people buy drugs with cash. People sell drug dealers. People do all sorts. Wherever there's opportunity for bad-hearted people to operate and take advantage of things, it's always going to happen that way. And, crypto seen that early in the stages, which was good, though, because now it created a way for security. Appreciate you, cuz. Now I created a way for security on these digital assets, and that's what we're waiting on first. So the government will never roll something out that they don't know that's going to work 100%. They won't never halfway roll something out to us. They'll make sure everything works. They'll even test it on themselves first. They'll pay themselves with this. They'll operate themselves with this, and they'll make sure everything is lined up on one accord before it becomes mass adoption. Okay, and we're close to those days now. We're very close to mass adoption. It's my pleasure. Appreciate you, Auntie. Thank you so much. But yeah, it's mass adoption that we're waiting on to really make this pop. But that's a good thing, because a lot of these tokens that we'll talk about and a lot of assets in this digital asset realm, it's very cheap because we don't have clarity. People don't know what's going on. Most of the people don't understand it. Other countries have invested more into it. Other countries operate in these rails more than us because we change our presidents every 4 years. So sometimes one president could be for this and that could last for 4 years, and if they get elected again, that could last for 8 years. But once they're gone, they might not want to pick up on that. They might not like that. They might hear crypto and be like, it's too much risk, too much scamming. I don't want my presidency to be remembered as that. So that all of those things factored in is like dominoes, and each effect has a bigger effect on the next one, right? So, now that brings us to today time where, we got Bitcoin sitting up here at 91,000. So you could see that the market is actually gaining some traction, and people are understanding. The crypto market has about a $3 trillion market cap. So that means $3 trillion are invested into crypto assets, into digital assets, which is a good thing as well. And the thing is, it's $3 trillion in the crypto market as a whole. More than half of that is in Bitcoin alone. Okay, and the reason why is because Bitcoin's a standard. It's the first thing when you start investing into crypto. One of the first assets you'll come across is Bitcoin, and that's why we're gonna start right here on Bitcoin, because it's the first asset that you'll come across. You know what I mean, in this digital realm. So right before we get into looking at some of these charts and doing some understanding of these tokens, I want to talk about what Bitcoin is and what makes Bitcoin so special. Okay, so there's one huge theory with Bitcoin that people look at and could be afraid of, but a lot of people look at and it actually brings that safety net asset to Bitcoin, and that's the anomaly of who created Bitcoin, right? So the creation of Bitcoin, remember, we're going to backtrack back to 2008 real fast. It was an autonomous name of a person named Satoshi Nakamoto. Okay, and now we don't know if this is a person. We don't know if this is an entity. We don't know if this is a group of people. We don't know if this is an agency. We don't know if this is a country. We don't know if this is a government. But to me, we don't look at theories. We don't look at any of that. We look at facts. We look at what it is, and we weigh up all the options, and we see what is a safe investment, and that's how we risk management our rewards, right? So in 2008, Satoshi Nakamoto made this as an answer to the recession that we just touched on. And It was a decentralized thing. It took him about 3 years of making this, and he had a team put together that he only talked to on emails. The email chains are still around. They're actually like historic artifacts now. Already 20 years later, they're historic artifacts because it's the creation of something revolutionary, right? But a lot of people don't understand that yet, so it's not as big as it seems. And but yeah, in like 2012 maybe he disappeared. So now no one was able to reach the Satoshi Nakamoto. No one was able to find out who this guy is. It left a lot of uncertainty for people. So that alone put probably like a 5 year delay on, the hype of Bitcoin and the hype of the crypto market and the understanding of digital assets and the future of our financial rails. But, it also made a good thing that no one could dictate this money. No one could go make more. No one could print more. No one could steal it. No one could do any of that. It's a deep theory that people want to believe in. We need to see a face to the person to know that it's a valuable asset. When yeah, that could be true for some people, but realistically, it doesn't matter because 100 years from now, when the market's still around, we won't even know who the guy is. Like those people walking around the earth on 100 years, they not gonna know what kind of guy or what kind of lady this person was. Just like George Washington, the stock market and New York Stock Exchange was created under him. We don't really know what kind of George Washington, what kind of man he was. We don't know anything about him really, other than what we see in history books is the 1800s. We never shook his hand and seen his vibe and been like, oh, okay, like, yeah, this is a cool guy. I'll go invest into some stocks. No, no, we don't know anything about any of that. So that's how I look at it personally. And as you look at, and it took me to get to that level of awareness and understanding for Bitcoin by looking at the stock market and going back and seeing when the stock market was created. How was that created? How did that all come about? Because we were African Americans, like my generation of family and lineage were slaves at the time. They were slaves in the 1800s, you know, so they had no chance to invest money. You know what I mean? A lot of the richest people in the early days of the stock market were slave owners. So am I going to look at the markets and be like, well, since it was created by slave owners, I'm not going to invest and miss out on the opportunity of generational wealth? No, I'm not going to do that. So it's the same rules apply here to Bitcoin, okay? So yeah, it was created back then, decentralized asset. And now, as this becomes normalized, appreciate you too, Millie. As this becomes normalized in the world, digital assets and the crypto market and these rails that we're going to be operating in soon, you got to think to yourself, how am I going to be able to capitalize on this? And we could look at Bitcoin real fast, and you see it's at 90, the all-time high it's ever been at. So this is the highest point it's ever been at. If you look to the right, that's $126,000. So that means one token is worth $126,000. But to really understand how valuable $126,000 is, we're going to come back to the beginning of everything. So this is the beginning stages of Bitcoin. So you see Bitcoin first hit the market in 2009. Now it hit the market in 2009, the crypto market. That's when the crypto market was created. Bitcoin was being looked at since 2008. It takes a lot to create a token, and we'll get into that. That's called tokenomics. But tokenomics is not level one. So we'll get into that down the road, but we're going to just stay right where we're at. So you look back here, and we could look at these prices. So if you look at, let's zoom in real fast, get a better understanding of what's going on real quick. So we're going to go all the way back to these early stages, right, of Bitcoin, mind you. I want to know what some of y'all, if what some of y'all were doing in these days in 2010, in 2011, in 2012, right? So we're looking at this random date, September 2nd, 2010. Bitcoin was worth 6 cents for a token. 6 cents for one token. 2025, January 4th, it is worth 91,000. In just November of 2024, it was worth 123,000 for one token. Okay, so obviously we could see how much impact it's had over the years from 2010 until now, right? And then we could even come down over here. 2013, it had just gracefully hit $1,000. So from 6 cents to $1,000 in 3 years, off of speculation, off of people finally understanding something. And a lot of people seen this and was like, oh my gosh, I'm going to invest. And guess what that means? That means the market goes up. The price of Bitcoin gets more valuable. The more money circulating into people buying Bitcoin, the more valuable it becomes. So the price rises, right? That's how the market works. Stock market, crypto market. The more people buying something, the higher the price is going to go up. The more people nervous, not putting their money in or taking their money out, so selling, the lower the prices are going to go. So the markets are going to come down. So for instance, if we have a war going on, that creates uncertainty. So people are like, man, I don't know the state of the government. I don't know what's going on. Let me take my money out these investments. That's how markets crash. We look at the Great Depression. The stock market crashed in the Great Depression because everyone was getting burned. Everyone put their money out, and as people were pulling their money out, the people that were just sitting in positions, they lost their money. So there was no money to pull out, right? So when you look at this stuff, the more people selling and selling and selling, triggering sales due to fear, due to war, due to not understanding, it makes the price goes down. But once you start understanding and you start liking and you're like, okay, this is a good investment, guess what? We see that $1,000 in the 3 years, right? So that's the start of Bitcoin. This was years ago, 16 years ago now, and you see Bitcoin's just been on a crazy rise since. And I want you to look at everything that's going up. Like, it goes up, this is people starting to understand. It comes down, this is people selling. And you sell for different reasons. You take profit, you don't understand, you get in late. Like, if it's already coming up and you buy right here and people start taking their money, you lose money, and now you like, this is a scam. A lot of people think that. And when you think like that, you don't want to invest anymore. And when you don't want to invest anymore, you're not going to put your money in there. You're not going to teach your kids. So now your kids go generations without understanding. And if they don't take it onto themselves to understand investing, they won't teach their kids. And then they won't teach their kids. And the cycle continues. That's a generational curse right there. That's how it's born, off of one ancestry history making the wrong move, right? So let's come back to the current day real fast of Bitcoin. So now that we just kind of unpacked some history on Bitcoin and seeing where it came from, how it was even started, what made people even think of digital assets and all of that, we could kind of see now. Remember, it came from 6 cents. Oh, I'm tripping out. So remember, it came from 6 cents. So now, hold on, let me delete some of this stuff. This is other chart work right here. I don't know how this even popped up on the screen. But now we're looking at it at 90,000, 100,000, and people still are still uncertain about it, still not understanding it, still thinking it's a scam, still thinking it's whatever it is. But the fact of the matter is, now the government is adopting this. And if you would have told early investors this in 2010, you never would have got to this point. You never would have thought that. This is my grandson. I just started investing from his presentation he gave me over the holidays. I now have ETFs through Schwab, crypto, and Bitcoin is next. Yes, ma'am. See, I love to hear that. That's my family doing that as well. So that definitely makes me feel a lot more proud of my family as well, getting involved into investing. And you could do that for your family as well, because like I said, generational curses is broken by us teaching each other, leaning on each other. One thing for sure and for certain, and we'll get right back to where we just left off, is there's enough money in the markets for all of us. Like I said, the crypto market right now is just a $3 trillion market cap. Okay? We look at an asset like gold. Remember the California gold rush? So gold's been around for a while. That is a $300 trillion asset. Okay? There's a lot of money in being invested into gold. This is a gold chain. They're melting gold all the time. Reselling gold, buying gold digitally. And you got to think about gold like, hey, the California gold rush, that's something that happened in America, not in our generation, but in America. That's what kind of got the gold even popping, was that gold rush, and other countries sitting on mines of gold. And then since it's limited, that's where it's like, okay, gold is limited, it's more valuable. And over time, people just keep buying it, and it never goes away. So now looking at Bitcoin, and I'm glad we even got to that, because a lot of people refer to Bitcoin as digital gold. Okay? And the reason why they refer to Bitcoin as digital gold, so we'll do like some compare and contrast of actual gold, so gold bars, and Bitcoin. So gold bars, remember, when you mined it, it was limited. People were out there mining, people were out there looking for them, searching for them, until the well ran dry and there was no more in the mines and the caves, okay? And that's the scarcity factor of gold. That's what makes it so valuable. That's why our US dollar isn't as valuable, because we just print more. We'll print more money. We're in debt because we print money. So that the whole printing money came around under Nixon's campaign, a president that was on the verge of being impeached, but he created this like, hey, the Vietnam War, just to like fix our debt and get through this war, let's just make our own money, print it, send it out, and tell these other countries like our money's the most valuable. You know what I mean? And we've been stuck in that process for about 50 years now, coming up on 50 years. Well, I think 71. Yeah, that's been 50 plus years, about 55 years, and we just print, print, print. That's not scarcity. There's no bottom supply. There's no top cap. Gold, there's scarcity. You can't go print gold. You can't go make gold. What's out there of gold is out there. A lot of gold is being hoarded. We have our own reserve of gold. Fort Knox, we probably have tons of gold down there. Other countries have gold. It's valuable because of the scarcity. So then you look at a token like Bitcoin, and we're going to get a little bit into tokenomics, that word I mentioned earlier, tokenomics, the study of the tokens. But Bitcoin only has $21 million tokens available. 21 million tokens, not dollars, 21 million tokens, excuse me. There's 21 million tokens that we could buy. Okay, so remember when Bitcoin was 6 cents back in 2010? You could have bought all 21 million, right? But the thing is, you can't, because the way digital assets is set up, you got to mine it just like gold. So for Bitcoin, you got to mine these coins as well. So right now, those early miners, those early minters, they were on the internet. You digitally mine it. It's not like the California Gold Rush. You don't got to go out into the dirt and get your Levi jeans and get a pickaxe and get dirty and start smacking bricks and making gold crumbs come out. No, you hop on the internet and you mine them. You do cryptography. You look at that. You look at these codes. You break them down, and you get rewarded with the tokens, right? You get rewarded with those tokens. Those tokens is the reward for mining, for minting, for solving this mathematical equation. You get minted with these tokens. Bitcoin. Remember, 2010, Bitcoin wasn't valuable. It was worth 6 cents. So you just did this. People were looking at it like a game. I just mined some Bitcoin. They gave me 50,000 tokens of Bitcoin and it's 6 cents. This ain't worth nothing. But you didn't understand the true value of the crypto market yet, right? That was the early stages. That was what was going on in 2008, 2010, right? So now fast forward to where we are now. There's been 14 million tokens mined so far, okay? And they say the last token will be minted and mined in 2140. 2140, you'll be able to mine the last token for Bitcoin. 2140. We won't be here. I mean, maybe, hopefully. You never know with God. Someone could be here walking this earth. But 2140 is a long time away. And we'll still be mining these tokens, right? And remember, there's only 21 million of them. That's where the scarcity comes in. So now, okay, when it was 6 cents, it wasn't that much. But now, it's $91,000 for one. So now the race to owning one is big. You just having one Bitcoin token is going to be life-changing. If you could leave a trust for your kids and that trust has one Bitcoin in it, you would set them up for life. You would literally set them up for life. If you had a trust fund and when they turned 18, they unlocked it and they had one token, it would be life-changing for them. They'll be able to go out in the world. Maybe they hold it, maybe they sell it, maybe whatever, but they'll be able to have one Bitcoin token. And for today, it's worth 91,000. But with the future of crypto and the financial rails and when mass adoption comes around, we're looking at a token. I don't like price prediction or price guessing. We're looking at a token that could be worth a lot of money. I believe one day it will be $1 million for one token. And the reason why I say this is because it's $91,000 in the market cap, so the money flowing into buying Bitcoin tokens is only $2 trillion. And like I said, remember gold is at 300 trillion. So imagine only half of that money is getting invested into buying Bitcoin. Bitcoin price goes up with the more money being bought into it. Okay? And that's why governments, our president, Donald Trump, he has 11,000 Bitcoin tokens. Robinhood, what platform do you suggest? Robinhood is good because it's you could buy stocks and you could invest on crypto as well. It's becoming cross-platformed. But I started with Robinhood, but I use Uphold personally, and then I have a Ledger, a cold wallet to store my crypto, because the reason why is because this is digital money we're talking about, okay? So any if any platform were to be hacked, and don't hear this and get nervous or get scared out, because it's the same game we play with the banks. But if one of these platforms were to get hacked, cyber hacked though, cybersecurity, we could lose it. You could lose your money. And anytime you load up into one of these brokerages, they'll recommend. Thanks, Ma, for the follow. You see, welcome to the road to generational wealth. But anytime you put your money into these brokerages for crypto, you're risking the assets of getting cyber hacked, basically. And that's where all brokerages, you'll see the alerts. They'll recommend that you get a cold wallet. A cold wallet, you get a 24-word code. You don't pick the code; it's assigned to you, and you only can write it down. And anytime you buy it, you want to sell it. You want to sell any of your money or to access your account, you have to have that code. It's a safe key. So that's something that's big in the crypto realm, and that's what I use for that. But yeah, to get started, Robinhood is a good one. I would recommend as well. Like, so the big ones, our biggest one for buying crypto assets is Binance. That was created by someone, an early investor into Bitcoin, and he turned billionaire. Like, he turned billionaire and became the world's leader crypto bank. So that's a good one. We have crypto.com. A lot of people may know what crypto.com is because crypto.com is on sports. They're broadcasting well. They're monetizing well. They bought the Lakers stadium, so crypto.com arena. That is pretty much just a brokerage to buy crypto, so that's a good place to start as well. And then you got Coinbase. Coinbase has been around for a long time. They actually are a public company, so you can invest into Coinbase stock as well. Safe, secure. A lot of these big ones, they have stronger security as well. So it's just like if you bank with Chase. You know what I mean? If you bank with Chase, you don't really even think about Chase getting hacked. But the possibility is still there. And Chase will reimburse you. These big ones will reimburse you like that. When you go start trying to buy crypto with these smaller banks, they might have less plans of giving you your money back if this happens. So that's why they recommend. They make disclaimers all the time. Like, hey, if for some reason you got hacked, we not giving you nothing back. I would stay away from the ones like that say if you get hacked, we got nothing to do with you. Like, you know what I mean? Because they know it's a possibility, and to avoid lawsuits, they're doing that. Okay, so for investing into crypto, I would invest stuff like that. And so for me, I use Uphold, so I would say Uphold as well. Crypto.com, Coinbase, and Binance, right? And a lot of these tokens, they don't have the same. A lot of tokens aren't available on every single brokerage because there's 190 million tokens being made, crypto tokens. So we got Bitcoin, we got Ethereum, we got Solana. There's a lot of different ones being made. Bitcoin is going to be on everything. Like I told you, Bitcoin's the leader of the market. My pleasure. Yeah, Cold Wallet, add that to the bank, your memory bank if you haven't heard of it. Shout out to my boy Joe. Joe actually introduced me to crypto, into Cold Wallets. Ledger Live is the one that I have that he recommended to me. About $300 for a good one. You could get one as cheap as $199 probably as well. And you don't need the biggest, fanciest, flashiest one. You just need something that's going to keep your assets safe. But yeah, so shout out to Joe for that, and happy birthday to Joe too, because it's actually his birthday as I look at the date. So shout out to you, bro, if you're watching. But yeah, so those are the ones that I would recommend, the big ones like that. I use Uphold though to answer that question. Okay, so going back to comparing Bitcoin to gold again and the scarcity of it, right? So remember, the biggest factor of Bitcoin is its scarcity. And when we look at a couple other tokens, I'll touch over a couple other tokens after this too, but we got to start with Bitcoin if we're getting introduced to the crypto market. The biggest thing about this is the scarcity of it. Only token that has this sort of scarcity, because it was created in the beginning, and according to, I've read through a lot of Satoshi Nakamoto's emails. According to his emails, he only made 21 million tokens because he didn't know what was the right number. He was like, honestly, there's no other tokens. What up, cuzzo? I see you on here, Walter. I see you. But he made it like 21 million because he didn't know what was the proper number. Nowadays, a lot of these tokens are having 197 billion tokens out there, 150 billion, 100 million, hundreds of billions, you know. So the only crypto that's really worth anything when you look at it from the scarcity aspect is Bitcoin. That one right there alone is digital gold. You know what I mean? It's digital gold. It's not like it's actual gold bars. It's actual representation of gold. No, it's the comparison. It's digital gold. Okay, That's what it is, because you'll be able to buy gold tokenized. You know what I mean? That's what the crypto market's going to open up for us. You'll be able to buy gold tokenized. So it's not gold. It's not gold digitally. It's just digital gold. When you look at the scarcity of it, the rareness of it, one day supply is going to run out, and that's the day that it's going to be worth more. You go, nephew. Appreciate you. I got a lot of the family here. I see a lot of the family here. Yeah, appreciate that. Okay, so looking at Bitcoin and looking at these charts, you know, so remember what we were just talking about when it comes to chart work, okay? If and a lot of people haven't even started investing yet. So when you do invest, the charts is essential to buying assets, okay? Unless you buy ETFs, and ETFs is basically a group of stocks in one. So you get all the best stocks for one. That's the safest way, and that's really a great way to start, because you don't have to do too much. You just buy them, dollar cost average into them, you buy percentages in, and then you let it do its thing, because it's going to go up over time. Because even if a stock performs bad, they'll take that bad stock out, replace it with a good one to keep it safe, okay? But charts are essential in investing into assets, because you need to see where the buyers and the sellers are. It's all psychology when it comes to investing, okay? Price is drove down by sellers. Price is picked back up by people buying, okay? So it's very simplistic. You need to have a representation of where that's happening at, and that's all the charts are, okay? So as we look at these charts, each one of these, appreciate you, Auntie, thank you so much. Each one of these candlesticks represent a day, because we're on the day chart, right? Each one of these candlesticks represent a day. So you got to look at it like a battle, right? Let's look at it like it's a battlefield, right? So red means sellers. Red means more people selling. Green means buyers. So we'll look at each day. So on the bottom of the screen, you can see the date. So Thursday, 14th of 2025 of August, you see it was a red candle. So guess what? There were more sellers of Bitcoin than there were buyers. That's all that means. Anytime you see a green candle, like right next to it the day before, that means the buyers won that day. And there were more people buying Bitcoin that day. And when you look at the red one, more people sold that day. So you want to take this stuff into account when you're about to invest into it, because you don't want to buy on the day that it's all the way up here at all-time highs, okay? Because if it doesn't break more all-time highs now, you could find yourself in a bind. You can find yourself in a bind. So the name of the game is to buy low. Buy low and sell high. But let me show you exactly how they try to trick you out of that. I'm going to show you how news will scare you and put that fear into you, how they will make you nervous, how they make you won't want to invest, okay? But it's just the simple factor of when price is down, people like take that as a red flag. You know, as, oh my gosh, price is down. It's not valuable. It's losing its value. It's losing its gain. When that's not the price of the asset, doesn't necessarily decide how valuable something is. If Apple drops down to $20 in shares and $20 in price, I'm gonna still have an iPhone. We're gonna probably still update our iPhone. Once the iPhone 14 runs out of juice and it cracks your screen, guess what? You're gonna have to go to T-Mobile and go get the iPhone 16, and you don't even know what the price of the stock is. So it doesn't change that. What's bringing the price down is people selling. So they can hear bad news, they can have uncertainty and be like, okay, let me take my money out. But the people that are scaring you on the news, telling you like, hey, they're losing value, they're down, stock market's down 20% today. The people behind the scenes, the rich, the smart money institutions, that's what smart money is in the market, is institutions, banks, the big companies, they're rubbing their hands just like this. Like, prices down, retailers, us, everyday people are retailers, regular Americans, people that don't have billions and millions of dollars to flush into the market, maybe putting 100 here, 100 there, 1,000 there. That's retail money. But they shaking their hands like, man, retailers is scared senseless. They driving price down. I'm just going to keep on letting them do it. And once it gets right into this range right here, I'm going to buy, and it's going to go up, and I'm going to get a return on my investment. And guess what? As it goes back up, everyday people that don't understand the markets, they're like, okay, it's going up. Now I can invest. Because they need that safety feeling. You need the safety vest of like, okay, price is moving up. Now I can invest again. So if you get caught in the middle of a run up and now people are like, okay, this is a good time for me to take some profit, you'll lose the money that you thought was a good time to invest. So there's there's an index, right? So let's load this up real quick. CNN has an index, okay? It's called Fear and Greed, okay? CNN right here. It's Fear and Greed. The Fear and Greed Index right here. This is how you know it is crazy, right? It's a Fear and Greed Index to track the stock market and see how scared people are or how greedy they are, okay? So extreme fear, that means everyone is selling. Everyone's taking their money out. If there's war, if there's a pandemic, it's probably going to be extreme fear. But guess what? People look at extreme fear, the smart money, and they're like, okay, everyone's fearful. I got to buy. It's time for me to buy, okay? I got to buy some more, all right? Neutral means it's going back and forth. You know what I mean? Yeah, my pleasure, bro. Thank you, Reggie. But, you know, neutral means it's going back and forth, okay? So some days people selling, some days people going up, not many people scaring, not many people's greedy. It's just normal. You know what I mean? This is a honest state of the markets. Then you got extreme greed. So that means everyone's excited to put their money in. People may have just got paid. People, it might be stimulus is going out. So if stimulus is coming out, greed's going to go up. You want to know why? Because people going to want to go invest their stimmies. You know what I mean? Or if we got all-time highs and it's just good sentiment in the market, it's going to be greed. It's going to be extreme greed. And a lot of people's retailers, we think at that time, oh, everyone's excited to invest their money. Everyone's greedy. Everyone wants to get more money. Let me go invest. But the smart money, the money that really moves the market, remember, smart money is the institutions, the banks, the billionaires, the millionaires, the companies, okay? That's the money that's really flowing into the market. Let's get out of here real quick. That's the money really flowing into the market. When it's extreme greed, they're like, oh no, I'm not buying nothing. They don't know what they doing out there. Let me just enjoy my price going up. Okay? Let me enjoy my price going up. That's what they do. And that's how we have to shift our mind. We have to think like that. When the markets is red, when that greed and that fear and greed index is at a all-time extreme greed, we need to be like, it's time to buy. It's time to get more assets. You know what I mean? Not market's down, no one wants it, it's not valuable. No, that's the wrong way of thinking. And that right there, that quick switch changes everything when it comes to investing. It changes the whole game when it comes to it, right? Okay? And going back to the chart work real quick, and again, we're looking at Bitcoin, right? So remember, every green candle is buyers winning, every red candle is sellers winning. Okay? So we see right here, we got September 2025. This was just a couple months ago, okay? We were down at 108K. So more than we are today, but I want to just talk about the significance of this right here. We were at 108K recently, and then it ran up. Oh, try my crypto, Charles, as I listen. Oh yeah, of course. So thank you for commenting that, Reggie. So if you want to follow along with your own chart, or you want to mark your charts like this as well as we're talking about this, that the website that I'm using, and it's an app on the Apple Store or the Google Store if you have an Android, it's called TradingView. Okay? And you could download it, and it's free, but it's free to start off with, but to get more amenities as you level up, as you understand more, it's gonna cost some money. But it's free to start with. It's free. Okay, so if you wanna follow along, go ahead and download TradingView or visit TradingView on your internet browser, wherever you may be at, and that's how you follow along. Okay, so coming back to September though, right here, boom, we were right here at 108,000, right? And we had some good news, some great news, some news that had to get people ready to buy Bitcoin, okay? And each day we started going up. Sellers started building momentum. This is how that fear and greed index starts turning up a little bit. So that fear and greed index on CNN is for the stock market, okay? We'll talk about the fear and greed index on crypto in one moment, okay? So each day though, sentiment was going. Buyers are gaining momentum. You see on Sunday, we got big green candle. That means a lot of buyers. We'll look at this top left up here, okay? Because we'll be able to see the open and the close. So that O is what price started at on this day. So it started at 109K. It ended at 112,000. Then you got that next day. It went from 109. I mean, if you go to the next day, it went from 112,000 to 114,000. Okay, So buyers building momentum. So in 2 days, it went from 108K to 104K. That's $6,000. And guess what happened the next day? It kind of went down a little bit, but not much. It opened at 114,000 and closed at 114,000. 200. That's not bad news. That's people taking profit. So if people were in down low, they took their money out. Like, okay, let me get some profit real quick. Like, I see green on my screens. Yeah, let me take some money. Let me go do what I got to do. And that's not a bad thing. That happens in the market. But guess what happened after that? This is how you know buyers had momentum. The next day was another one. 114,000 it opened at. It went up to 118,000. Okay? And then it went to 118,000 and it went to a high of 121,000. Okay? It went to a high of 121,000 right here on the next day, but it came back down to 120,000. Okay? And then it opened at 120,000, went to a high of 123,000. That's the H right there. And then it went to 122,000. Now, this might sound like a lot, so we'll just wrap it up quick. Each candle represents a day. So 1, 2, 3, 4, 5, 6. We went to 6 candles. In 6 days, it went from 108,000 to $123,000 per one token. Okay, and they had a lot of momentum. So then we got to the last of our run up right here. We got to 126,000. That's the all-time high. That means Bitcoin has never been worth more per token than $126,000 as of now, okay? And if you would have went back to that 2010 when it was 6 cents and told people like, Bitcoin is going to be worth 100K one day, people would have made a lot of different decisions and probably wouldn't have even believed you. So like, you telling me this is going to be worth $100,000? It's 6 cents? What are you talking about? You know what I mean? It does sound foolish, but when you do the research and the understanding, yeah, it makes perfect sense. Okay, so in that short span of a week, we went from bottom of 108 to all-time highs, 126,000. So that's good news if you bought low. Okay, a lot of people wait to see it go to halfway here and get in, but you got in too late, right? You started buying too late. You don't get the whole reward if you ain't already in position before the run up happens, before the blessing comes. You gotta already be in the position before the blessing gets there. Like, God ain't gonna bless you if you ain't ready. You know what I mean? You gotta meet him there. You gotta be ready for that blessing. Once you there ready, like, okay, I'm ready for the blessing, God, he gonna know when to come through. It's the same thing in these markets. If you already doing your part, meeting him halfway, right? Meeting these charts halfway by buying low, accumulating, the day that comes, it's straight upside. It's literally straight upside, okay? So now this is the sad part of the markets. You remember, if you get in late, you don't know. You think this lasts forever. You think it's gonna go on forever. No, it can't. At some day, somebody's gonna want to sell. And that day came August 7th. The first day sellers took back momentum. Okay, so it went from all-time highs that previous day. We peaked out at 126,000. So the next day we went to 124,000 at the open and dropped to 121,000. You could be like, oh, maybe people taking profits, maybe. So guess what that maybe was? That was the next 2 days. Maybe people taking profits. So people bought back some, people sold some more. Wasn't sure what was going on. But then this big candle right here, price went crazy. It went from 122,000 down to 103,000. That's people selling. That's people getting in right here, right when Bitcoin was at 125,000 and it topped up at 126,000 and they seen it come back to 122. They like, I gotta get my money out. This ain't safe. This is a scam. Why did I listen? Why did I, man, forget that. I'm about to just go buy them shoes. I'm about to just go buy that. I'm about to go buy that watch. I'm about to just go shopping. You know what I mean? Take the money out and price went down. And sellers took momentum back. So I actually just touched on this in a previous video, that this is a handoff. A handoff basically means buyers is giving back momentum to sellers and vice versa. Sellers give momentum to the buyers. It's a handoff right here. All right, we're tired of buying more because we're just going to take our profit. Here you go. You basically handed it to yourself, though. I'm selling. Okay? I bought a whole bunch of back then. Let me take some of my money out. Sell. And that's what the handoff is, right? But, okay, so this was August right here. August 6th. Ever since then, we've been in the fall. And that's where this wedge came from. That's how I created this wedge. Ever since then, we've been free falling, right? And it's coming down, coming down, coming down. People uncertain. News been coming out. Now people are like, wait, why did I lose my money? Wait, Bitcoin not regulated? Wait, what's going on? Wait, You know what I mean? And the more smart money sees the price going down, they're like, okay, we could get Bitcoin cheaper. We can make Bitcoin cheaper. Bitcoin 90K? Ooh, what if I could buy some at 80K? What if I could buy, so they'll just keep selling to some of theirs too to drive price down. That's where a lot of people come in with price manipulation, because a lot of the people like that, they'll bring price down so they could intentionally get back in and scare other people out, right? They'll get back, the smart money will bring price down intentionally to scare everyday people of out of their money to also sell. So now, not only is they selling, making price go down, but they scaring us out the mix. So we're selling, bringing price down right into a zone where we could buy some more up at the best price possible, right? At the best price possible. So in this case right here, the best price possible was 80K. And the reason why I know it was 80K is because previous chart work, right? You see it was bouncing in between these zones. Before the run up, it was at 80K. Most buyers stepped in at this 80,000. These three candles right here made me believe that that's where buyers stepped in. That's where buyers were selling. You just look at chart history. There's not, these numbers aren't random numbers. When you see something's worth $1 or something worth $2, it's not a random number. It's not a random thing. It's not a random gig. This is something that actually is coming back to. This is a good praise for people to buy more, because the mindset behind it is, okay, if we once were able to buy at $80,000, I want to buy again at $80,000. Why can't I? So we just gonna bring price down to $80,000 so I could buy some more $80,000 because I missed it last time. You know what I mean? That's how the structures work. So when we're looking at the charts, we need to be like, okay, it's not illegal. It's how the markets work. The part that I think's illegal about it is they don't educate us on this. They don't teach us in schools. You know what I mean? Even if you go to college, this ain't a curriculum. You gotta go out your way to get this, and then they still ain't really gonna teach you the best of that, right? So then they don't teach us in schools. In high schools, we don't learn this. We learn in every other math. Every other math. You telling me we took 12 years of school, 12 years of different types of math, and no one ain't teach us how to read these charts? One time, not senior year, not junior year, not sophomore year. I can remember every math we took. Algebra 1, Algebra 2, geometry, and we didn't learn this though. Why do you think that? It's because they make money off that fear and greed. If everyone knows what's going on, there's no more fear and greed. You know what I mean? Now we all playing the same game. We all playing the same game. We all hunting liquidity. Liquidity is basically those buy zones. So right here, this 80K, that's liquidity. That's where people stepping in to move price. We just hunting liquidity now. But that would be a good thing too. More money will probably be in the markets. 100%. Once you learn it, nobody can take it away from you. I get you. Facts. Once you learn this, it ain't going nowhere. So that's why they don't teach it, because they don't want you to learn it. All right? They want you to be fearful in these moments so that they could make money. The rich gets richer. The rich gets richer. I'm not even taking notes. I'm just listening and processing all of this. Facts right there. I appreciate y'all. I'm glad I'm breaking this down to where it makes sense as well. But yeah, the rich gets richer. If they were teaching this in school, if they were teaching this as we were babes and we grow up and we got an understanding of this to make money, who's the fearful ones now? There's no one fearful. There's no one fearing nothing, right? We know to sell. We know to buy. We know when to do it. That's why I decided to even make TraderBoyz, so that we could get as much people knowing how to work this, right? So, like I was saying, smart money is going to bring this money down, going to bring these charts down to 80K to step back in. Look, it hit $80,000 one time. So this sell off from 120,000, the goal was to bring it to 80K, as my charts show me. This isn't me speaking out of knowing everything or nothing like that. This is me looking at the charts. I'm just doing chart analysis. So the conclusion that I come up with is that we pushed price to all-time highs and we sold off to bring price down to buy at a better price at $80,000. We're talking about a $40,000 discount. $40,000 discount. Black Friday. I know we love Black Friday. Some people buy all their gifts on Black Friday because it's cheaper. You go buy that TV that's $1,200 just because it's $700. You know what I mean? So if you buying an asset, if you gonna want to buy something, this is when you buy it. It was once $120,000 and now it's $80,000. Now let's do a disclaimer real fast. Every single asset in the world isn't valuable, isn't utility, isn't something that works. So some of these charts are just bad companies. That's why it turns into, okay, I gotta do research on these companies. I gotta make sure this is a good investment. You know what I mean? So like if Apple's down, we know what Apple is. That's a good thing, right? We know what Microsoft is. We know what Amazon is. Now we know what Bitcoin is. A lot of people don't know what Bitcoin is though. That's the main problem. Those are safe stocks. We know, okay, we know. All right, Amazon, yeah, Amazon will always be around, right? Right? Amazon will always be around? Okay, yeah, I could buy some. You know what I mean? That's how we look at that. People don't know what Bitcoin is. So you see Bitcoin down, you automatically think it's bad news because you don't understand it. It's lack of understanding, lack of knowing. It's not necessarily a negative thing. You just don't know what's going on, right? Okay. So price went down to 80K. And now we kind of been going up. Look, price went down to 80K. So it touched 80K. Okay, cuz. Yep, appreciate you, cuz. Price went down to 80K Friday, November 2025. Mind you, this was just a couple weeks ago. This is just a couple weeks ago. This is not that long ago. I know we in the new year, but 2 months ago, it's 8 weeks ago, okay? This is 8 weeks ago, right? And ever since then, since $80,000, we never touched 80K again, okay? We've went up. We actually went up in that next week up to 92,000, okay? So that's how you know people stepped in to buy. You know what I mean? People stepped in to buy more. That makes so much sense because I used to think that the price mattered the most, but that makes so much sense in this economy. Yeah. Price does matter a lot, okay? Price matters to us. That's what price matters, right? What matters the most is what are you investing into, okay? Like I said, some of these charts are just plain bad because of the type of company behind it, okay? If you're investing into if you're looking at a chart, right, and the company is negative on the year, nobody's using it, you don't even know what it is, and there's no true utility behind it, then yeah, you know, that's not a good investment to even think of doing anyways. You got to do research when it comes to this stuff as well. You have to do research. It's essential. You have to know what these companies are, even when you do stocks. Like, I'll do another separate day on stocks, but we'll touch on this real quick. Even when you invest in stocks, there's a lot that goes into stocks. You got quarterly reports, earnings. Earning reports matter. Earning reports are basically, you're seeing revenue over the quarter. You're seeing their sales over the quarter. You're looking at these businesses like a business owner now. And you're just a regular civilian that owns stocks. You know what I mean? But your mindset shifts. You got to think different now. Who's the CEO? You know, who's running the show? What's going on over there? You know what I mean? United Health. We know the healthcare stock. They're worth a fortune. Their CEO died last year. He got assassinated. Walking to a meeting. He was ready to go host a meeting like any other day. Somebody wearing him down, killed him because of their insurance claims. Killed him. Blood in the not even broad daylight. It was 4 a.m. He's on his way to work, and they killed him. Now, the price suffered after that of the stock. Why? Uncertainty. People that owned the stock were shareholders. Who's gonna run the show now? They just killed the CEO. Who's gonna drive the ship? Oh no, I gotta get up out of there. Sell. Price goes down. Price back up now. But price went down because no one knew what was going on. Then you appoint a good CEO with a trusted face, with a good brand, with a mission statement, with something to prove. And then people get safe like, okay, it still is United Health, right? I mean, they're running the game, right? Okay, now they got a face. Okay, let me buy more. And guess what? Now the price is back up. So that's when price matters, is on a good company. If the company is good enough, you want to look at it like, okay, this is going to be a company that sticks around. Even though price is down, I just got to buy at a lower price, right? And like I said, buyers stepped in here, and we've kind of just been in chop zone. But that's where these trend lines came from. So now, to start 2026, right? We're gonna go now. We gonna, this is the last we're doing on Bitcoin, and we're gonna talk about some other tokens as well, okay? But I really thought it was imperative to start, you know, here, because Bitcoin was the start of everything when it comes to this crypto market, right? So we look at Bitcoin, and this is the new year, right? The new year, brand new year. Everybody makes new resolutions. Everybody's excited. Some people want to learn to invest. You know what I mean? It's new beginnings. It's a lot going on. But so far for this year, Bitcoin has been getting bought into. Okay, so to close the year of 2025, Bitcoin closed that. So we're going to look right up here at this top, member. So the C is closing. So that means the last price of the last minute of the day on the 2025. It closed at $87,554.88 on the year. Okay, closed at 87K. Since that red day of the last day of the new year, we've been in straight green. So people have been stepping in buying. And I could tell you a couple reasons why people are buying. The crypto in the crypto market, and okay. So we're gonna take we're gonna take the word crypto out of it for right now because I know it's a hard barrier to break because you may have an own impression on crypto. In the digital asset market, because that's all crypto is, digital assets. So in the digital asset market, there is a lot of hype going into this year. You know, we got a pro digital asset president now for the first time ever with Donald Trump. Pros and cons about him. We don't get political. We look at charts and we invest. But we have a pro digital asset team in the White House. You know, we got a lot of these companies starting to switch over to digital assets. We got insurance companies wanting to switch over to digital assets. We got these digital asset pioneers telling us it's going to be a big quarter one, that they have a lot of plans for Q1 of 2026. And if you don't know, some of your jobs may be structured like this, but there's 4 quarters in a year, you know, and it goes by 3 months. So first 3 months, second 3 months, third 3 months, fourth 3 months, 4 months. And that's just quarters. So they feel like Q1 is going to be big. So now that all creates buyer sentiment. It gives me, buyer sentiment is just a reason for me to buy. I just need the reason. Now people are buying. They're like, okay, cool. It's to start the year. And then of course you got the retailers' decisions too. Like new year, new me. I want to start investing. I want to get more locked in. I want to focus up. And all the people that think that, I pray you stay on that track. I pray you don't get your hands shaken out by the volatility, by sellers. I pray that you do the research to understand what you're investing into and do not get tricked out your spot. Okay? I pray for all of that stuff as well. But that's also buyer sentiment, you know, new year, new me. That's another good buyer sentiment right now. And it's cheap. Remember, one more buyer sentiment was $126,000 in November. All-time highs. So it's on sale too right now. So now we've been going up every day. Look at this. Every day of the year has been green. Look, and this is how you know it's true buyer sentiment. One, my structure. This wedge line. These ain't just random lines. We were trading in between this range for 3 months. From November till now, really October till now, we've been trading in here, and we finally broke structure. That's a good thing. That's another bullish sentiment. That's another reason to buy, another reason to be right. But realistically, you want to already have been in position here, so when this comes, you're already reaping the benefits. But this is the part they don't tell you about. All this noise in between. It's a roller coaster. Yeah, I'm up now. Oh no, I'm down. Yeah, I'm up now. No, I'm down. Yeah, I'm up now. No, I'm down. You know what I mean? You gotta be strong to not get your hands shooken. And the way you be strong is by understanding. Having that commitment, having that discernment to understand, like, they not gonna shake me out. I know Bitcoin is scarce. I know there's a race to earn it. I know one day you ain't gonna be able to buy it. I know the value of this. So none of this short-term noise should be able to scare you, because now you got to think, what would it be in 2030? That is consolidation phase right there. Yes, that's consolidation phase. It's consolidating. That is exactly what that is, Reggie. Good call out. Consolidating. That means price has been consolidating right between here. That means it's just been going up, going down, going up, going down, right? Not any true structure yet. It just broke out of there. That's another good phase. It's another good thing to see. Okay? All right, so, and then another thing that's creating bullish sentiment is these higher highs. So the top of each one of these wicks is basically like, it went to this high, so 90K, that's the highest it went to, but it closed lower than that. So the wick is just the highest it went to. The stop of that box is where they stopped at, where the close was at, okay? But you see higher highs. Each close of the box is getting higher. It's getting higher, it's getting higher. That's the bullish sentiment. And you see higher lows. That means each low, like the lowest it was on the day, it's getting higher. It's getting higher. Those are all good signs to see. And as we look at these tokens, the other tokens I'm going to show you, you're going to see how much Bitcoin ties into everything. Because if people are buying Bitcoin, the standard, I look at Bitcoin, to me, Bitcoin is the standard of the market. It's the standard. People buying Bitcoin, guess what? Now they're like, okay, the crypto market's in good hands. The good crypto market moving now. People believe. Then they're going to go buy these other tokens. And these other tokens we'll talk about. Okay, and we'll look at these charts too as well, just real quick. Okay, but that's the sentiment behind investing and buying, and this is the same thought process behind buying stocks as well. Okay, it's the same thing. The name of the game don't change. It's buyers and sellers. It's human psychology. None of that changes. It's just two lanes now. It's always only been stocks. But now with digital assets, now there's a digital asset phase. There's a whole nother asset class. So remember, we talked about the 1800s when the stock market was first created. The richest of the rich were the ones that were there for that day. JP Morgan, they still around. Okay, now JP Morgan not around. The guy, his family, he not around. But that brand is still around. They bought Chase. If you didn't know, JP Morgan is running Chase. So if you got Chase, JP Morgan doing business with you. And they were one of the first ones. John D. Rockefeller, that's a pioneer. He was around in the 1800s though. So now we're looking at the crypto market, the digital asset realm, and we're around for this. We were blessed to be alive with the internet being created. This is where this all started. The internet being created in the 90s and the early 2000s set up assets to go digitally. Not just money. We're talking about everything. Real estate. You're going to be able to buy real estate through digital assets. You know what I mean? You're going to be able to get paid through digital assets. Payroll infrastructure goes to digital assets. You know, okay? You're going to be able to buy cars, digital assets. You're going to be able to put your house in digital assets. Okay? You're going to be able to buy land as a digital asset. Okay? And this is the beginning of that. So we're blessed to be alive for the beginning of all of this. Okay? Because 100 years from now, let's not even say 100 years from now. 20 years from now, when a lot of people are at my age, I'm 24, a lot of people my age, we got kids and stuff, they're only going to know this. They're only going to know digital assets. Okay? And they're going to be like, Dad, what were you doing when Bitcoin was created? Son, I ain't know. Is that what you going to tell them? Son, I don't even know. I didn't even know Bitcoin was a thing. What? How didn't you know it was a thing? It's the only thing, right? That's what the kids gonna think. It's the only thing. Digital assets? What are you talking about? But it's the same thing with the internet. Because I asked my parents, my mom too, Pops, Ganny, what did y'all think of the internet in the 90s? Most people didn't kind of know about it. They didn't kind of see what was going on. And it was Bill Gates, Jeff Bezos, Steve Jobs getting on the stage telling us about it, getting on the news telling us about it. But let me show you where they trick you. The people interview them, making it a joke out of it, trying to humiliate them, trying to throw dirt on it, so that you also agree with that. So it's not anyone's fault. You know what I mean? It's not anyone's fault that in the 90s you didn't see the internet coming. They'll do everything in their power to do it behind walls. Okay? They'll do everything in their power to not get you to see the big picture of things. So the internet was just the beginning of this, man. The internet being a thing and getting mass adopted, that created the door for digital assets and the crypto market, quote unquote. That created the door, was the internet being created. Now, 2008, the recession, that created a reason, a why, a purpose. That's the biggest thing, the purpose. What was the purpose of it? Okay, cool. Now we got a reason to go digitally. Okay? Thank you, banks. Now we're gonna take the power from y'all. Okay? That's how the idea of decentralized assets were created, okay? And the smart contracts and all of that stuff as well. So it's an opportunity here in the digital asset market, in the crypto market, okay? Because we're in the beginning. We don't know what's yet to come. A lot of people have their own perception on this sorts of things. Like, you should only buy Bitcoin. You shouldn't buy anything else. You should only buy utility stuff. You should only buy meme coins, okay? And if you've seen that pie video I made, the pizza video I made on YouTube, I recommend you do check it out after this live if you haven't, but I'll go over that real quick. I compared the crypto market as a whole to a pizza. There's 8 slices in the pizza, right? Okay? And 4 of those slices is Bitcoin, pepperoni. And then you got cheese, utility. So the utility assets of the digital asset realm. So things like payroll infrastructure, things like what the banks may need to use, whatever we're gonna have to use to get tokenized assets working, tokenized identity working, that's utility. And then you got meme coins, and meme coins is what is hype right now. That's what got all the kids excited. That's what got people fast money. You know what I mean? And I could create a meme coin, you could create a meme coin. We just have to invest into it, and then we do price manipulation. That's where the disconnect with meme coins is. I could create the trade coin, right? And I could go get some people with some money, like, hey, let's start this coin with me. Let's put some money in there. Let's make some market cap, okay? Create $1 million, hype it up, get regular people to invest into it, and once regular people invest into it, retailers, it start going up, and I was there since the beginning, so I got it at the lowest price. I take all my money out, sell majority of it. Everybody in between gets cooked. That's how a lot of meme coins work. There's some meme coins that have some utility, like Dogecoin, for instance. That's a meme coin that all Dogecoin is just a meme coin by Elon Musk. So a real rich guy with some who can't just rug pull people because he has actual companies, you know what I mean? And now he's using his meme coin, Dogecoin, to buy Teslas and stuff like that. There's a little utility there. And that's why utility assets is cheese, because there's utility everywhere. There's always cheese on pizza. Always cheese on pizza, okay? No matter if you get Supreme or whatever you get. Pepperoni, okay? It's going to have to be cheese underneath there. So there's going to be some sort of utility on something. Okay, and that's meme coin. Meme coins are supreme because there's a lot of different meme coins. There's a lot of different things going on there. There's a lot of different manipulating going on there. That's why me personally, I just stay away. That's how my gut tells me, just stay away. I don't want to get involved with somebody rug pulling me. I'm just gonna go invest my money with the smart money, with the people controlling the market. Like, I'm just gonna invest my money there and watch these charts. Okay, and that's how I look at it. And then you might have did the math. That's 7 slices. The 8th slice is the question mark. We don't know. We don't know this slice. We don't know exactly what it's going to turn into. We don't know if games are going to be used with digital assets now. If you could go hop on the game and make a digital currency via the game. We don't know how that could look. You know, as the market develops, there's so many more things that could happen. Remember, stock started off as railroads. You never thought that you'd be able to buy companies. It just happens that way. You know what I mean? The people running the stock market back in the early 1900s were banks. The bankers were running them. J.P. Morgan was the man that had the stock market in his hands like this. We didn't know that because we don't understand how the market works. That's when the SEC came after the Great Depression. Okay? FDR, President FDR, President Roosevelt got in office and seen what was going on and made the SEC. We didn't know we would have had to make the SEC when it first started. It revolutionized to that. We was like, we need some regulation. We need some monitoring of this. It revolutionizes as it goes. So that's the last slice of the crypto pie. Half of it is Bitcoin because Bitcoin was the leader. Bitcoin is the scarcest. Bitcoin is digital gold. It's the big bro of the market. Okay, but there's a lot of different ways that this could all unfold as well. And now we'll talk about those different ways a little bit. I ain't gonna show you all the sauce just yet because we gonna get into all of it that I got and I know and I understand. But we're gonna talk about some of these utility tokens that we were just mentioning, and one of them being XRP. Okay, and we got good chart work already ready for this. Okay, and if who's familiar with XRP first and foremost? Actually, let me ask y'all because I know I'm yapping. So, who's all familiar with XRP? Because XRP is a game changer, right? And the thing about XRP is we got the banks gonna be using this. This is more bank infrastructure, right? This is more cross-border payment. So their utility is banks. So like banks gonna be able to try to move money around through there and cross-border payment. So we'll be able to move money all over the world, right? And the way that this could potentially play a factor into it all is if I'm trying to pay someone overseas or something like that, you know, we would use XRP. Right now we use banks, and the middleman is the banks, and we're using USD. Got to convert USD to pound. You got to do all this extra steps. You got to get the wire fee. It takes long. Batch payments. You know what I mean? It's a lot of just noise in between, but the middleman makes the most. The banks make the most because they're the one taxing you. So the banks don't want this to happen just yet because they're going to lose out on a lot of money. Okay? They're going to lose out on a lot of money. All right? But they don't want you to know about these things yet because the thing about XRP is it's going to be one thing that moves everything. So it's not going to be like I'm going to go pay someone in XRP necessarily. Like if I want to pay, if Reggie is in Dubai, I'm going to pay him with XRP. No. I will pay him with the digital asset, and that's now a stable coin. But the thing that's going to move the stable coin to your stable coin is going to be XRP. You're going to be in XRP rails because I need to go the financial route of cross-border payment. What speaks all money languages? And that's where the rarity of XRP comes in. It speaks all money languages. in my opinion, okay? It speaks all money languages. So no matter what, you'll be able to transfer that. And it has fast transaction times, 3 to 5 seconds. Not a week, not 5 days. You ain't gotta worry about holidays. The market's open 24/7. Okay? It's always locked in. Right? And that makes sense. It makes sense that it happens that way, okay? It makes sense that it's 3 to 5. It has to be. It's digital. It's faster than sending an email. If you email yourself right now, it's gonna be a quick little delay. It's gonna be like 7 seconds. It's still fast. You know what I mean? The internet's still the internet. But that's 3 to 5 seconds. So by the time you send it and you tell them load up their wallet, it's already there. Like, hey, go look, I just sent that to you. It's already in there, okay? Boom. That's the good thing about it. And since XRP's traded like that, anything in its rails will be traded like that too. Remember, crypto is just like this. These tokens has rails. So remember, the market is a pizza, but in the pizza there's different railroads as well. So XRP has its own set of rails. It pays in that cross-border payment settlement. Okay, it's gonna be doing with banks. Banks are gonna capitalize off this the most, because banks ain't gonna want to lose the money. They just gonna have to move it this way. They just gonna have a new way of moving the money now. So now they're gonna be like, okay, I can't be the middleman. I can't capitalize off people. So now I gotta move the money through XRP system. Okay, and that's how the digital asset realm is gonna set up for XRP. So that's something that I look at. Remember, this isn't fine. I'm not telling you anything. I'm just giving you some game on these assets. So don't sue me. But we're looking at things like this, and it looks similar to the Bitcoin, right? So since July, it's been falling down in this wedge. Okay, and to start the year, you see January 1st, it's been coming up. And the reason why we see all these green bars right here in July was because this was crypto week, okay? And this is the fun part of everything, right? So this is how you know that we just need some regulatory issues and fixed out, and we need some clarity behind this, which the government plans on getting us sometime this month with some new acts and some new bills, right? But nonetheless, this week in July, so this was my birthday, July 10th, so I actually remember this very well. I was right in New Orleans. That was family reunion. Shout out to the family, okay? But this was the beginning of everything right here. So in July 9th, Trump announced Crypto Week a little bit around this time, okay? He was like, hey, Crypto Week is going to be this week coming up. So the following week right here, the week of the 14th was Crypto Week, this Monday. Crypto Week, and what Crypto Week's gonna be is we're not gonna talk about nothing else other than crypto regulation. We gotta get some clarity behind this. We gotta find out what's going on. We're gonna do a deep dive for a full week. We're gonna talk about all these different things. We're gonna draft up some bills. We're gonna draft up some acts, and I want Congress to have all that stuff on my desk beforehand. Okay, I want everything on my desk. Of course, it didn't go that way because it's our government. We know how they move, so everything wasn't on his desk, but they did talk about a lot of crypto. They did talk about a lot of regulatory issues, okay? And they did mention that it's going to be the future of our financial system, and a lot of people swept that under the rug. A lot of people didn't know Crypto Week was a thing, and a lot of people didn't pay much attention, okay? But needless to say, now we know, right? We know that they talked about it, and we know it's the future, so that's still good news. No matter how long it takes, it's going to happen either way. So just off of that news of Crypto Week, buyers stepped in. Look, every day from that time he announced down here, XRP was getting more buyers, because XRP does have utility, so it makes sense for people to buy. XRP is only worth $2 right now, but it's like the sixth biggest crypto asset right now. So actually, let's load something up real quick. So we're gonna load this up. Hold on. And this is called Coin Market Cap. Okay. And this is how you see the prices of all the cryptos, okay? This is just like seeing like the standard, the chart data, and seeing how much market cap it may have, how valuable it may be, whatever the case may be, okay? And for some reason it's not loading up. All right, we got some slow internet. Either way though, XRP is like the sixth most valuable digital asset right now. Of course, behind Bitcoin at number one, man, they got $2 trillion market cap. XRP is the sixth most valuable, fifth most valuable, like 120 billion market cap. So imagine XRP even got Bitcoin market cap. And you might think, how does one get more market cap? So XRP has majority of its market cap now from us buying this token. Okay, so we're making the market cap from us buying this token, going up, going up, going up. But the most market cap, and this is where it's different from stocks, The most way that the market cap comes into these crypto tokens is the utility. Okay, remember the financial rails we talked about? So if XRP and its parent company Ripple could move a lot more money through their rails, remember they got these rails, they're going to do cross-border payments, they're going to be back in banks. If they could move a lot of money through this, so like if I'm trying to send my money and I'm spending $100 and my $100 move through their rails, that $100 is in their market cap. That's how their market cap grows. Okay, so if they could get their market cap to grow more and more by utility, it's off to the races. And that's what we invest on. We are investing on utility. We look at these assets like what has potential to really be utilized. Okay, what could be truly utilized? And XRP is one of those that could. You know what I mean? Because then, just like we said earlier, purpose. What's its purpose behind this? What's the purpose behind XRP? Okay, and the purpose behind XRP is to fix the batch payments, so like we don't have to get paid. We don't have to pay other people fees that we are using to get our money. It's just like if someone sends you money on Cash App and to withdraw it, you get, someone sends you $20 and you withdraw it, you're getting taxed $1. So then you like, hey bro, I ain't gonna lie, you send me $21 because I don't want to have to lose my money on that fee. That's what it's trying to get at. That's the purpose. And I hate that. I know if you watching, you hate that too. No one wants to pay that fee. So that's like, okay, that could be a true change. That's addressing a real issue. That's a real world thing. That benefits us. Okay, that is actually beneficial. That's a beneficial utility. I'm going to invest into that because I could see things playing out that way. Remember, the financial world is going digital regardless. There's a 7-hour press conference of these big stable coins and digital asset leaders telling the Federal Reserve what this is, and they're breaking it down to them so that they could go global with it, so that they could mass adopt this. 7 hours, and only 62,000 people watched it. 7 hours talking about this. It's gonna happen regardless. Now, of course, we move a little slow. It could be a year. It could be this year. A lot of people are hyped for this year. That's why you see the beginning of this year, people stepping in. They think this year could be the year. It could be 2027. It could be 2028. It could be 2030. By 2030, it should just be regular. We using stable coins off the bat. I think there'll be a lot more clarity before Trump gets out of office, for sure, knowing the type of president Trump is. He wants to make an impact. He wants to say he's the one that did this, made the world digital. You already hear him. He's already telling them, hey, we got to get ahead of these countries. And he's blaming it on Biden. Biden ain't know. His administration ain't know. They didn't know nothing about crypto. They actually made crypto on the SEC list. Remember we talked about the SEC as well. They're the Securities and Exchange Commission. So they control. They're basically the FBI of investing. So for stocks and stuff like that. He was like, Biden told them, hey, crypto's your top priority. As in you need to regulate that. You need to we're making sure that doesn't happen. Okay, that's what his administration told the SEC. So now Trump like, hey, this is years of bad leadership. All these other countries are already moving this way, and we behind. Well, not today. America, we got to be the first to win. It's always a race with President Trump. We got to be the first to win. We got to run the race to crypto. We got to run the race to digital assets. So with that all being said, at least by 2028, we should see some real world utility happening. Okay? At least by 2028, because he'll be out of office. All right, and we don't know what's gonna happen. We don't know what's gonna happen once he's out of office. We don't know who's gonna be the next president. We don't know if it's gonna be a Republican, if it's gonna be a Democrat, if it's gonna be an independent. Remember, we don't really get too political. It's what it is. But as an investor, you have to be aware of political stands that could affect your investments. So, by the time Trump gets out of office, even if a Democrat does win, he'll probably have enough regulation going on and enough Americans using this to where the Democrats would have to pay attention to it. So remember, when it was new, when the recession first happened, it was just barely the internet. There was no have to. We don't have to. It's a choice. We don't really have to buy into digital assets just yet. Not yet. We don't know much, okay? But there's always been research getting done. And while that was all happening, it still was getting built in the back end. Ripple came around in like 2017. They're one of the first in 2012, but they went on the charts in like 2017. Remember, Bitcoin was 08. There's a lot that's been being created in between these realms of no clarity. All right, so once we get some clarity and some utility, that's what will make price go up. That's why I like looking at utility tokens, because what will serve us, because that's where the money will flow through, right? The money will flow through that. So I'll talk about one more asset as well that I think will also have some good utility, just so we can have like a good understanding of things, of a lot of investing strategies when it comes to the crypto market, right? And the most important thing is, remember, utility to me. Utility. So even when you look at Bitcoin necessarily doesn't really have utility. It's decentralized. So you can move money, you could transfer money there, and it's not trackable. It's not traceable in a sense. That's why a lot of people are like, Bitcoin's a scam. We don't know who made it. We can't track your payments. That's what the government wants you to think it's a scam, because they can't control it. It's decentralized. So there's a lot of other decentralized tokens as well. And a lot of early crypto and digital asset investors, they only thought digital assets would ever be decentralized. Like that's the whole point of crypto. Like, we're supposed to be decentralized. This is a smack in the face of the government. Yeah, it really is. It is a smack in the face of the government. And the government don't like that, but the government will fall in line with this. They'll be like, "Oh, okay. So this is how we could use This is how we could use decentralization. This is how we could use digital assets. Okay, cool. Then this is what it's gonna be. And then it's gonna be normalized for us. Okay, and then they'll have better police over all these illegal payments, and they'll create systems. They'll probably end up making the SEC for crypto, or adapt a section in the SEC for crypto. Okay, so it's gonna all shake out that way, right? So we're just gonna look at another good one that has some good utility. And this is one of my favorite ones, actually, when I talk about it. And remember, so XRP was $2. So if you want to go buy one token, it's $2. Remember, Bitcoin is 91K. Okay, Bitcoin is still good to buy, because we know Bitcoin is going to go back to 126K. It could go to 200K. It could go to 300K, million eventually. Whether that's 5 years from now, 10 years from now, it's generational. Bitcoin is generational. Okay, and that's the face of the market. But there's other things, there's other possibilities that will play out in the markets as well. And this is another one. So this is called Zebek Network. ZBCN is what it's known as on your portfolio. So if you were on your brokerage on Uphold, you would type in ZBCN to find this, and look at this. It's worth 0.0027 right now, and it's up right now, actually. So that's a good sign. I like to see on this last 27 minutes of the day, it's up. But it's not even worth a penny. Okay? It's not even worth a penny. So let's do some chart history real quick on Zebek Network before I even get into what that is. Okay? Look at Zebek Network. It started in 2024 on the chart, so it's relatively new. It's not much price history. It came in the gates. People ain't know what it was. So price went straight down. Nobody was buying it, and the people that did buy it, you see it open here, people might have bought it off the hype, off speculation, and once they realized, oh, it ain't going no much higher, smack down. And guess what? That's where this box was created. That's called liquidity. So we got liquidity boxes marked out already, and all these red liquidity boxes is buy zones. So anytime it's in these zones, we're buying. That's smart money. We're going to shake our hands, we're going to buy. We're not going to get nervous. We're going to buy every time, okay? That's how the market works. So now you look, it's ping pong, and it's ping pong, and it's ping pong, and in this year, 2025, in May, it ran up. Whew! Had some good news. That's when they started announcing partnerships. The CEO came out. It was a lot of motion going on around this time. A lot of people got hyped up. They announced their agenda and what they were trying to build into. We're just doing some chart work right now. We're gonna talk about the actual ZBCN and what they are right now, though. We're doing some chart work. Okay? So look. Even when they had a little run up early 2025, see, look, it hit this liquidity zone that we have marked out and bounced back down and came back down again. That was a test. And then now it came back up, bounced back down, but guess what? It broke through. We needed the sellers to break through. Sellers broke through there, and more people started buying at this zone, because the reason why it comes up here and smack down is because that's a psychological sell zone. So right here is where money decides to sell. That's why it keeps coming in here and coming down. So to run up here, that's take profit. Okay, cool. Let me take my money out. Came back down. That's where sellers happen and taking their money out. We got chop, consolidation. We had a good run up. Same thing happened again. Remember, these aren't random numbers. It came right here. Okay, cool. Let me take my money out. And then boom. So now if people took their money out, bought again. But at this time on the push down, lots of people bought. Lots of more money got flown in, and it had a great run up. And that great run up led to an all-time high in May 2025 of not even a penny, still like 0.007. It wasn't even a penny yet. Okay? And then ever since then, we've been in this wedge. But we actually broke down under this wedge and into the buy zone. And guess what? That's not a bad thing. So anytime price breaks structure, all of that does is mean if it breaks structure in the uptrend like we've seen with Bitcoin, it means that it has a chance to run up. If it breaks structure as in ZBCN right here and comes down, it means better buy zones. That's why we already have our lower buy zones marked. Okay, because we want one day for it to come back down here. You're buying it cheaper, right? So it came down into liquidity right here. This buy zone we have marked off from here. Remember, March, price ran up here, it couldn't break it. Ran up here, couldn't break it. Guess what? When price consolidated for months on months on months, this same zone, it got to this zone, it got to the bottom of this zone, and guess what? Sellers stepped back in. These are not random. These aren't random. The charts aren't random. It's showing you where the money's being bought and sold, and you want to understand that because that's where you should jump in as well. Okay, so now it's just retested it again. Buyer stepped in again right here. Look, every time it gets in the box now, look, it ran into the box, went all the way down, buyer stepped in. Now anytime it touches the box, people are like, okay, this is a good price to buy. Buy, run up, take profit, come back down. Buy, run up, take profit, run back down. And the reason why it's just like coming up and down is because people are trading it. They're buying a whole, it's super cheap, 0.002. So people are waiting for it to get as low as possible. Buying, you only got to buy like 100,000, to buy 100,000 tokens because it's not worth a penny. To buy 100,000 tokens is only like $50. So people are putting, imagine you put $2,000. Now you already got 2 million tokens. So people are buying 2 million tokens as cheap as possible, letting price run up, getting money back on those 2 million tokens, turning $2,000 to $4,000 and selling, and it's repeating it. Okay, that's short-term thinking though. That's short-term thinking. Okay, that's good. That's good fast money, passive income. Okay, cool. Flipping, you flipping your money. That's good. That's not a bad thing to do at all. That's smart. You know what I mean? It's trading. That's more intraday trading. Okay, but let me show you where the long-term money is. This is how you long-term invest. Every time it comes into a buy zone, you're buying more and you're holding. If you really believe in something, that's called hodling. So hodling is a digital, in the crypto market, it's a digital asset term for holding. And the way this came about, remember, the crypto market is a funny thing because it's like a community right now. Because if you believe in it, you know the future. And if you don't, you outcast it. So the people that believe in it kind of stick together. They got each other's back. They believe the same things. So there was someone in this community a few years back that was ranting about it. And he was saying, I'm not selling, I'm hodling. But he was trying to say holding. It was just a typo, just a little typo. He put the D in front of the L, okay? And now this has become a global normalized term for holding crypto long term. Hodling, HODL, hodl. So you want to hodl your crypto, okay? Especially when it's a utility like this one. You want to hodl it. So it comes down, you buy more, you hold it. You don't sell when it comes up here. You let it hold. You just let it do its thing. Okay, and you enjoy the profit. You look at it like, okay, cool, it's going up. Once it comes back down, you don't panic. You buy more. And it goes back up. Cool, like this is a good price. Then it comes back down. You buy more. Okay, that's all you do. And you hodl. And you could have a price target to end your hodling. So maybe that's $1, maybe it's $5, maybe it's $10. You know, whatever the price target is, you hodl until you hit your price target. Okay? So if you could accumulate 1 million tokens every time it hits buy zones and it hits $1, that's $1 million right there. And that's the generational wealth part about it. And since we're saying $1 million, it sounds almost unbelievable, right? It sounds unbelievable. Like, no way. What are we talking about, right? But no, it's worth 0.005. You know what I mean? 1 million tokens is $2,000. Okay? It's $2,000 for 1 million tokens right now. So when you look at it from that point of view, I'm telling you, it's different. It's a different ball game. Now it goes to $1 off utility. So now we're going to talk about real quick because I never even mentioned what Zebek Network is. How can it hit $1 million? How can it hit $1? What would need to happen for it to hit $1? How would my 1 million tokens I bought at 0.0027 I hold that to $1, right? And the way that it could hit $1 is so its purpose, its utility. Remember, this is a crypto token that, yes, this is why we get in now. Yes, exactly. But this is a crypto token that is functioned around payroll infrastructure. Okay, Zebek network is focused around payroll infrastructure. So what that means is they're building the financial rails to increase and make normalized real-time payments for your job, for salaries, for whatever, just real-time payment. So if I'm working my job and instead of me having to wait bi-weekly 2 weeks to get paid, I'd be getting streamed in real time as I'm on the clock. As I work my 10-hour day, once I clock out, guess what? I got my money on that day. I don't wait 2 weeks. I'm getting paid every single day. It's gonna bring value to your work. You know, that's the utility behind it. You're gonna show up to work knowing you getting your money today. And now there's a lot of pros and cons to that. Most people might have to find a new way to budget their money. Some people stuck in the 2 week payment system, but that's just all a facade. You know what I mean? We're gonna do a quick history lesson too on this as well. So why do we get paid in 2 weeks? Why do we have to wait 2 weeks for our checks to hit? Isn't that just how it is? Isn't that just how it's always been? No. That's not just how it is. It shouldn't just be like that. And the reason why it's like that is because in the 70s, remember I mentioned earlier in this live that Nixon had made that dollar bill. And now we've been printing money ever since, right? Okay? He made the US dollar global and backing stuff. He made us back stuff up with this US dollar that we control, by the way, and we just print out our country. We just print it out as we go. We just print more paper, okay? In the 1970s, he made that. So, with that being made, bankers was like, okay, we need to find a new way to pay people. Like, we don't necessarily have to pay people the same way we've been paying people. So there was a group of California bankers in 1971 that came together and was like, okay, we need to make a new system to pay people. And the way they made up with this system is called ACH. It's called Automated Call Holdings. It's ACH batch payment. And basically what ACH is, if I work my job, right, and I work my 2 weeks, the reason why I'm getting paid that 2 weeks is because it's cheaper for the employer. For tax purposes, it's easier for the paperwork of filing the payroll. This is all behind the scenes work that we never ever will see. We won't ever see this. Okay? It's easier for them to deduct taxes like that and pay it all at once. It's easier for them to pay everyone at once. So if I work my job at Chick-fil-A, because I work at Chick-fil-A, we have 150 people working, right, on our payroll. Instead of paying every one person and paying that tax of paying one person every time, you do batch payments. Okay? You work 3 days, we send this paperwork to the bank. Cool. That 3 days, you work the next 3 days, we send that system. Okay, cool. And they do the batch payment for 2 weeks. They do it for 2 weeks. And that's why you get paid every 2 weeks. Because now they do the batch payment from a Sunday to the next from the second Sunday. So 14 days from that Sunday, they'll submit that paperwork again. And guess what? You get paid you don't probably get paid till Tuesday, Wednesday, or Thursday. Because now, just like everything else, they got to go do all the paperwork. Don't let it be a holiday because banks close. It's a lot of more activity that goes behind getting paid than we think. We think that we just clock in, we go to work, we work our 2 weeks, and our paycheck just appears. No. How do you think the bank gets the money from the job that you work to load up into your bank? It's different banks. Imagine all the 150 people that work at Chick-fil-A. Imagine all the people that have different banks. Some might have Chase. Some might have Bank of America. Some might have Washington. Some might have Wells Fargo. Some might have SoFi. Some might not have a bank. So then you gotta print out a digital check. That's a whole nother thing. That's what it always was. Just paychecks. Just come get your paycheck. So they were actually pivoting away from paychecks, and they used the ACH batch system. Like, okay, we're gonna batch up all of our payments for the 2 weeks, and we're gonna pay limited fees, limited taxes, better paperwork, and put our employees at a disadvantage. But it's okay. They'll figure it out. They'll learn how to budget their money, right? No, some people never learn to budget their money. Some people can't budget their money. Some people still are living paycheck to paycheck. And that's not a jab at anyone, okay? That's not a jab at anyone, because that's what's been normalized. It's been normalized that way, that we have to wait for our next paycheck to hit because that's just how it is. And then I got to budget my next paycheck because that's how it's always been. And we get stuck into that cycle. And then you're stuck into that. As you're stuck into that cycle, you don't even have the assets to invest. So even if you wanted to try investing, you don't have the assets to. The investing game is of trial and error. If you don't understand it, right? You get in, you get burnt. You come back, you learn more, and then you come back. You get in again, you get burnt if you're not patient. And you're like, okay, I'm done. You either say I'm done investing, or you say, okay, I need to get in the lab. I need to understand more. I need to do more research. Then you do more research. Then you get clarity. Then you got understanding. Then you get in. Now you understand. Now you invest in. That takes money. That takes money. So if we're getting paid every 2 weeks on limited money and we budgeting and I don't even got enough money to lose, I'm not getting burnt twice. That is so true because I quit and now I went through this training arc. Exactly. It is true. The training arc is real, okay? But if we're getting paid in batch system payments to make it easier for all of our employers to pay us, we don't have no money to waste on learning, basically. So people get burnt once and think it's a scam. Like, because they don't even have the capital. Like, so I ain't getting back in there. I put my last $200 I had from that previous check into investing, and I didn't understand, and it went down. I bought in when it was hyped up, and I went down. We just touched on all of that. So that's not the right way to invest. And once you learn that, then you buy in the right way, right? So then we're looking at that 2-week batch payment, that 2-week payment system we have right now. Is the Beck Network is coming in like, hey, with the digital asset world and the crypto realm, we're going to be the ones to make payroll infrastructure real-time payments, stream real payroll, you know? And the reason why I like the Beck Network is because they're already doing it, right? They already got clients lined up. They're already working with FedNow, so NatPay, that's paying federal workers right now. Remember what I told you, the government not going to roll out a system without trying it on themselves. So they already struck a deal with the government. That's big, that's big, that's big. Those are the companies you want to look at in the digital asset world. Like, who's the ones working with the government right now? What would the government be using? What were they using for themselves? Because that's what they're going to roll out for us. I'm trying to tell you. And when they roll it out for us for mass adoption, that's when the value of these tokens, that's when Zebek turns into $1. That's when XRP could turn into $5. And it's like, okay, it's only $2 right now. Why is $5 so significant? Because if you buy so much at that low price, you only need it to go up to $5. And if you decide to hold even longer, you know what I mean? You reap more benefits. That's the whole point of investing, right? To buy low and to sell high. You could take profit at $5. You take profit at $5, you bought so much at, if you buy XRP, right, at $2, you got the 100,000 tokens, right? That's $200,000. It goes up to $5. You just made like $1 million off of that. So now you take profit. Like, let me take at least half of this out. You take profit, bring price down, of course, and then you just buy more with your profit. So now you got some little spending money, but now you're putting more money back into the market. So you already got a couple of the tokens you bought at $2. You bring it back down a little bit, you buy more, and you took profit at $5. That's like the main way to invest. That's what the institutions do. That's what smart money does. That's what our rich investors do in the market. Even the rich stockholders like Elon Musk, like, he has all his money in Tesla though. So as Tesla does good, so does he, right? But then you look at these other companies, and this is where the stock market is almost monopolized. You look at the stock market like, okay, who's majority shareholders of these? It's all other companies. Who owns the most shares of Tesla? Obviously Elon Musk. That's why he's the CEO and he's the one that can make all the calls. But there's other shareholders that come to the table with him, and those shareholders are other companies. Microsoft, Apple, BlackRock, hedge funds. They own the most because if you don't and this is where hedge funds make so much money, are people not really understanding the market. Okay, you don't understand the market. We do. We have good investment strategy. Give us your money and we'll invest it. But guess what? As you're giving them your money to invest, they're investing in it as the hedge fund. So BlackRock is investing your money. Warren Buffett done it for years. That's what Berkshire Hathaway is. He invests other people's money for the Berkshire Hathaway, and now all of that money he's investing for people goes as account of Berkshire Hathaway. So Berkshire Hathaway is majority shareholder of most of these major companies. So before most of these major companies make any plays, they got to make sure they bring the CEO of Berkshire Hathaway, which was Warren Buffett for year in on year in, to the table to let him be in the loop. And that's where it's monopolized, because we'll never be able to get to that point. You got to have billions of dollars to be able to sit at that sort of table. That's why other companies sit at other companies' tables, so that they make sure they're operating with each other. It's a crazy ball game, man. It's a crazy ball game being played out there, okay? Crazy ball game. But bringing it all back to home base for Zebek Network, its payroll infrastructure and its purpose, its utility is to stream payroll in real time. Now, is this something that could work? 100%. That's why digital assets came through. And this is something that we need fixed. Yeah, I would love to get paid hourly, daily. We already get paid out an hour, but we ain't really getting paid on the hour. I'm getting paid hourly 2 weeks. Like, I'm getting paid hourly every 2 weeks. Let me say that one more time. For me this time, though. I'm getting paid hourly every 2 weeks. It's a crazy system we live in, and that we normalize and that we made okay with. So yeah, it's due for a fix. Think about it. ACH batching was created by the California bankers in 1970, right? The government got a hold of ACH backing by the late 1970s, by like 75. The government was like, this is a way to pay other people. This is interesting. Okay, let's try this on us, make sure it works. Tried it on them. By 1981, they federally regulated it. So ACH batching has been something that every company has to do since 1981, because the group of California bankers came up with it. The government came across it. They liked what they seen, and they forced themselves to do it, and then they forced us to do it in 1981, and we've been getting paid like that ever since. Ever since. We got to catch up. No cap. So that goes into effect. We're going to make money off the coin, but also be up from consistently getting paid. Exactly. It's a double-edged sword. You'll make money off this coin because, like I said, if they could move the money of all of their utility comes from, and the market cap for them comes from doing that job, that payroll infrastructure for actual companies. So if other companies are getting paid and using and paying their employees in hourly and daily, they're going to need Zebek Network system to make it happen. So as instead of them paying the 150 Chick-fil-A workers, right, and going to the banks like, hey, handle that, wait 2 weeks, yeah, okay, cool. Instead of them having to do that, they'll just put it right in Zebek's system. So that 150 people that's getting paid, all that money's in Zebek Network's market cap. So as that happens, as they're moving money in real time, their price goes up. You know what I mean? Their market cap increases. So the more business that they could get, the more people that they could get using their rails, the more valuable this token becomes. Okay? And they're making crazy partnerships. This is why I personally like them. They got crazy partnerships. I already mentioned one with the government. They syncing up with a lot of big names to make this happen. Like, they want to be the front runner of payroll infrastructure. And that's where that investment comes from. Again, disclaimer, this is not financial advice. This is education purposes. Okay? So, this is Zebek Network, ZBCN. Would you say this is going to be a domino effect and bring other coins up as well? It could potentially, yes. It could, because remember what we talked about with the rails, right? So, Zebek Network, let's say their rails, remember, payroll infrastructure, so people getting paid real time. So, then it's like, okay, cool. But what if it's like a remote job and people can operate anywhere? What if the people I gotta pay need to get paid in India? My employees need to get paid in India. That's where Zebek Network meets XRP rails, or somebody along those lines that have cross-border settlement. Okay, so now that company, if they're paying up on a year $2 million worth, up on a 1 quarter, I should say, actually, $2 million worth of money to their employees. That's $2 million getting flown through Zebek Networks to get paid in real time, and in XRP's network as well, so that they could get paid overseas. So it could have a domino effect on other tokens. Now, exactly will that happen? I don't know. It might not even be XRP that they get in their rails. I know that their CEO was actually talking about a token called XLM, Stellar. You know, they could also do a lot of different things as well, but he was saying they have a lot of announcements coming out this year. So it could benefit them. They could operate with each other's rails. Realistically, it all comes down to what companies operate in each other's rails. Ooh, I got a dry throat.
Thank you, Jesus. But
yeah, looking at the long-term structure of this is definitely something that's a necessity. It's something that I would want, something that you probably want. So as we look at that and we put that in mind, I need some more water. But as we put that in mind, keep that in mind when you look at other tokens too. What's its purpose? What's its utility? Don't look at a meme coin and be like, I want to invest in a meme coin because I can make money fast. We don't play that game. We do not play that game. If you follow TraderBoyz, we don't play that game. We don't get into that sort of stuff. We look at utility, and we look at purpose. What can make this work? What would it fix it for? Who would it fix it for? Okay? And as we've been watching this, it's actually been going up. All right? As we've been watching this, it's actually been going up too. So we're on the last 4 minutes of this day chart. All right? And the last 4 minutes of this day chart means that the candle's about to close and the day's about to end. So let's look at Bitcoin one more time. And as these last 4 minutes of this day chart ends for the day, these are all different charts, by the way. We look at confirmation here. So now, it's still going to be bullish sentiment on the close because it's up 91K. And now, since it's bullish sentiment on the close, we wait for tomorrow. And what do we look for tomorrow? Now we know what we're looking for. We want to make sure that it's going to continue to go up and it continue to rise and that we continue to see higher highs. If we see a red day, that means people taking profit. If we continue seeing green days stacking on top of each other, price is slowly going up. And another way to see all of this stuff and see it in real time is indicators, right? Okay, so let me turn on a couple indicators real fast to give us an idea. And remember, now I'm getting into a little bit more of level 3 charts. Okay, indicators show you structure. It shows you how something is playing out. So actually, I'm gonna put this all in motion real quick for us, and we're gonna just look at this. So I'm gonna get the 8 EMA, and my 8 EMA is gonna represent emotion. So it's gonna show us how in real time emotion meets the market. And the 100 EMA is structure, okay? The 100 EMA is going to be structure. We're going to change this color. Okay? So that's easy to see. All right? So this is all important because we want to make sure, you see how price is respecting its EMA? It's almost like it's rising. We want to make sure that price doesn't come below this EMA. If price becomes below this EMA and closes under this EMA, it could be a potential handoff, and the sellers is taking control. So you see, January 1st, we finally got above this EMA and we close. The next day candle, January 2nd, is a retest. Comes down to the EMA, touches it, closes above it, higher high. Same thing, retest, closes again above it, but it didn't get the higher high. But today, the higher high again. And it hasn't even touched the EMA. So it's going to continue riding this EMA. So now, this is the emotion EMA. This is the state of us, our buyers of Bitcoin, sellers of Bitcoin. Where are we? How are we reacting to price? You see EMA pointing up, bullish sentiment. If EMA is pointing down like it was here, that means sellers are in control. So now price could meet at this structure right here, 100 EMA. If the emotional structure of the market meets the actual structure of the market, we got a huge decision to make. This is the hurdle we see at 96,000 is what it's at right now before we could hit 100K. It's not just going to run up to 100K just because people buying. No, it's a race to it. Okay, it's a marathon though. The race is a marathon. So first it needed to get above the 8 EMA. Next it needed to break structure. Next is going to have to come to this 100 EMA and break the structure of the whole chart. And once it does that, we could potentially see 100K. But that's why we got these levels marked off where sellers originally stepped in, right? So, I mean, I pray that something was said to open up some eyes and open up some ears to investing and wanting to get involved in investing and do all of that sort of stuff, because moving forward, man, investing shouldn't even be an option. It has to be something that you have to learn for yourself if you want to become financially free and create that generational wealth, or create even just a sort of some like stability for your family, for your kids, for their kids. And even outside of money, taking money out of this equation, it's just big to have that knowledge so you could know how to introduce your family members to this, your friends to this, your peers to this, your kids to this, because they won't do this in the schools. They won't, And if they were, it'd be perfect. So it would be perfect, because then a lot of more people would know how to do this. And you see, look, that previous candle just closed for the day. It closed at 91,000, and now this other candle just got in. So sellers are stepping in. You see prices moving fast. So now we just continue watching. We could come to the week candle. We could come to the week chart, look at weeks. And we got to see if before it goes anywhere, make sure the week candle breaks this. Our weekly candle needs to break that 92K, right? Before it could even touch the 96K, we looked at the daily charts. All that stuff matters too. All right, and I'm gonna do a lot more of this sort of stuff. Like this was a very good first live. Like I said, I pray that a lot of people came on here and was able to figure out just the basics of investing, and then we got carried away into the crypto realm. So we'll definitely talk more about stocks as well, because it's all the same game. The game doesn't change, but just do some research on your own, because all I could do for real is introduce you to this world. Once you get into this world, into this realm of investing, you gotta put some research and some hours in yourself. But the thing is, it becomes almost a supernatural feeling when you do, because you're gonna want to. You're gonna learn more. You're gonna see more. Of course, the money's gonna come in too. You're gonna see investments go green, and you're gonna get excited. It's gonna make you want to do the work. Okay, but first you need somebody to bring that water to you, or bring you to the water. Okay, whether it could be me, for you maybe, but eventually it could get to a case where you're the one teaching people how to get there. And you might not want to teach random regular people in the world, but for sure your family. For sure your kids. When you have kids, when I have kids, this is something that I want my kids to know. I want them to know how to invest for sure. Okay? This is something that you want to teach your parents, because they may have not wanted to learn it. Something you could teach your grandparents. Something that you could teach your boss. Something you could teach anyone, man. And it's just for sure stability in there. Okay? So, again, we're going to end this out with a bang. I appreciate everyone that joined. I'm going to just say a quick prayer for us so that we could go ahead and get out of here. So if you're watching this still, go ahead, just bow your head. I'm just going to lead us in the Lord's Prayer. We're going to wrap this up. Our Father in heaven, hallowed be thy name. Thy kingdom come, thy will be done on earth as it is in heaven. Forgive us our debts as we forgive our debtors. Do not lead us into temptation, but deliver us from the evil one. For yours is the kingdom and the power and the glory forever. Amen. All right. So I appreciate everyone tuning in again. Let's go ahead and try to learn as much as we can about investing. Always feel free to reach out to me via TraderBoyz. And you see, Bitcoin's pumping right now. Honestly, look at that. 91. It was at the 960. It was at 930 right now. It's already up to 960. So, new day flip. Buyer stepping in. But, yeah. I pray everybody have a great rest of your day. And we'll be back again with another stream soon.